This is Agostino, managing commodity strategist with Farms.com risk management. We're talking today about the big shocker and surprise from the USDA. The USDA reported the 2011 June acreage report and quarterly grain stocks report. Let's start off with corn. Market was looking for 90.8 million acres, and the USDA reported total U.S. acres at 92.3. That's up from the 90.8 in June. The March report was indicating 92.2. Last year, we had 88.2 million acres. Soybeans came in at 75.2 million acres, lower than the trade at 76.6 million acres. Last year, we were at 76.4. So initially on the surface, very bearish for corn futures, very bullish for soybean futures. Wheat, all wheat came in at 56.43 million acres versus the trade estimate average at 57 million. Last year, we were at 53.6 million acres. Overall, the June quarterly grain stocks report was bearish across the board. Corn came in at 3.67 billion bushels, above estimates at 3.30. Soybeans came in at 619 million bushels versus the estimate of 590 million. And all wheat came in at 861 million bushels versus the estimates at 830 million. So a little bit bearish on the grain stocks report. Bearish corn, bullish beans, and slightly bullish on the wheat. The spring wheat acres came in at 13.62 million versus estimates at 13.8. Durum wheat came in at 1.698 million bushels versus 2.1 million. So corn's been the leader thus far. And any reaction on beans or wheat are going to take, are basically going to follow corn unless beans can start taking a lead. And it looks like this morning the beans are trying to rout, because when we factor in lower acres and the yield at 43.5 today, ending stocks with an adjustment in grain stocks, ending stocks from 170 million to about 129 million. So that's bullish bean futures. And this is maybe the news that we need to take beans above $14 a bushel or retest the old contract highs. This is not the news that the corn needed. Many are going to question the USDA and their ability to forecast acres when just on June 9th in the June WASDE, they lowered total acres to 90.8, and now all of a sudden 2 weeks later, 3 weeks later, we're back to 92.3. So market may not believe it, but they're going to unfortunately trade that number, and may end up getting adjusted numbers later on in July and August, maybe still due to flooding in the U.S. from the Mississippi River and the Missouri River that is ongoing today. We basically will just follow along for the ride. Now, let's just talk about corn for one last second. With today's number, if we remain yields at 158.7, no change in demand, ending stocks go from 695 million bushels for new crop 11-12 to about 964. If USDA does decide to increase yields on the July 12th, and that is a report, and that is a risk, and we move it to, say, a 160 average yield, then ending stocks will balloon to 1.074 billion, and that again would be negative for corn futures. So if you're if you're a producer that maybe has planted corn late, and you're not comfortable doing some production risk, you may want to decide to either use futures or options to protect at least a minimum high price. 620 December corn futures still a very good price. With beans, you could on any rallies over the next 2 weeks where approach that $14 U.S. resistance, you may want to look at maybe selling some more beans.